Great to have you this morning. Elon focused on efficiency, profitability, mature themes, a word we don't always associate with him. That's not what, I guess you call it, the diehards wanted, or perhaps just the retail investment crowd. They wanted new models, a quicker Cybertruck.
Yes, good morning. Thanks for having me. I think the product roadmap update was a bit of a disappointment. I mean, there was high expectations coming into the quarter. Elon was participating on the call. He had previously said that he wasn't going to join earnings calls unless there was going to be a substantial update. So I think overall expectations were pretty high. While he did confirm that the Cybertruck, the Semi, and the Roadster were going to be delayed until 2023, which I think was expected by most investors, we didn't get a specific timing on when those exactly were going to be launched, as well as the cadence. Also, he did mention that they haven't even started working on the development of a lower priced vehicle in the $25,000 range. I think that was also a bit of a disappointment. As you look out over the next several years, Tesla really needs to move down into lower price, higher volume segments to really support their growth as you move into 24, 25, to really sustain that 50% growth, which is what they expect to do over the long term. So to the extent that they haven't even started developing that $25,000 vehicle yet, that likely means it's unlikely to launch sometime around 2025.
Ali, we know that Wall Street can be short-sighted when it comes to Tesla, and Elon Musk introduces all of these big themes as he did last night. He talked about self-driving and how that could be the most important source of profitability for Tesla. Are you modeling that into your notes, into your price target?
So we are modeling the opportunity for full self-driving subscription revenues. We think that's a very compelling part of the story. Elon mentioned that they're going to be rolling out full self-driving city streets version from beta to all of their customers at some point this year. We think that's really where the customer value proposition becomes very clear. You're going to see attach rates increase on those subscriptions. Right now, they charge $250 per month on that. If you assume roughly about a 50% attach rate, you could be talking about a $20 billion recurring revenue business as you kind of approach the end of this decade. So it really does start to move the needle. We are factoring that into our estimates to a certain degree. Obviously, if attach rates go above what we're expecting, that would be a source of upside. I think where we're more skeptical is the ability to move towards higher levels of autonomy, level 4+, and eventually commercial robo-taxi service. Elon talked a bit about that on the call yesterday as well, too. Obviously, there's some very big numbers associated with that opportunity. For now, we're skeptical on his ability to launch that anytime in the foreseeable future. In particular, we think there's going to be some underappreciated regulatory pushback to his approach there.
Yeah, certainly his promises of the past haven't exactly come to bear. Ali, I wonder, there's an argument that Tesla's head start on product, their head start on market share, their very good supply chain management means bad news for legacy OEMs that want a part of this business. Is that true?
We think the legacy OEMs are going to be able to compete. I think if you look over the next several years, the quality of the product that they're going to be launching on the EV side, I think, is very compelling versus what we've seen historically. They're going to be very competitive on price, and they're going to be very competitive on range. I think where Tesla still has an advantage is from a production capacity and a battery capacity perspective over the next several years. So as it relates to that, it's going to be very difficult for the legacy OEMs to kind of catch up from a market share perspective. And so at least through 2023, 2024, we do think they have an advantage there. But by the middle part of the decade, the legacy OEMs should have started to build up their own electric vehicle capacity, start to close the gap with Tesla. And that's where we think you could start to see Tesla's market share potentially start to take a bigger hit.
Ali Faghri, thank you so much for your insights. We'll talk to you again soon.
Thank you for having me.